Welcome everyone to our second YouTube video that we are creating, and today I wanted to share with you guys another free spreadsheet that I created. I use this spreadsheet a lot with clients when they when they're new clients, or even for some existing clients when they come to me and say, hey, I'm a new business, I work from home, I have an area that's used exclusively and regularly for business. Those are the questions I ask them. And I just emailed them this Google Sheet, and then they fill in the information. It makes my life easier. The one that I'm sharing with you guys today is a little bit more detailed. So what I would do if I had a client, I would just take out some of the unnecessary information here. Just delete, the columns that don't apply to your client. Delete the information on the bottom of the spreadsheet that applies to daycares. Just delete those lines, and then typically what I do is I have the spreadsheet as a Google Sheet template, and then what I do when a new client comes in, I will make a copy of that template, and then I will rename it with the client's name on it, and then I'll share that with the client. That way the client has it. Every year the client uses it to fill in the information for that year. So it makes really my life easier and the client's life easier, because they know exactly what I need every year for their home office deduction. So let's start. So this is a pretty simple one. This video should be very short, so hang in there with me. So the things you need to ask the client is, what's the square footage of the home office, and then what's their total square footage of the home. The one thing that you need to be careful here, clients sometimes will try to give you the square footage of the garage, but the garage is not heated. It's not an area that's really using heating or electric. I mean, maybe it's a little bit of electric, but typically what the IRS asks for the square footage of the home, they're asking for the finished square footage of the home. So just something to be careful about and read up on Form 8829 instructions, and make sure that you're putting the right square footage required over here. Okay, some of the expenses that are deductible for the home office: mortgage interest paid, and usually can get that on Form 1098, or if they don't have a home, if they're paying rent, and the rent paid. Property taxes, homeowners insurance, again, if they don't have a home and they're renters, then the renters insurance, if that applies. Repairs and maintenance out of pocket. This does not include capital improvements. This would be just for repairs and maintenance. It could be plowing, lawn services, any kind of repairs and maintenance. Typically, if I have a client who has a home office and he will, for example, paint the actual home office, my software has a column for indirect and direct expenses. So if he did a repair inside that home office that's directly related to that home office, and I'll put in the 100% column, versus which I call it the direct column, versus the indirect column, where if the client paints the outside of the home and that's something that will benefit both the client and the home office, then I'll put that under the indirect column. For utilities, of course that will depend on the client's home, but typically typical utilities are electricity, heating, gas, oil, or wood, water and sewer, internet and phone. Some clients try to give me cable and tell me that's a necessary business expense. I find that one hard to justify, unless maybe that client is a sports, I don't know. I'm just trying to think of who could need cable for their business, but I'm sure if they can make the argument, then I'm open to listening to it. Okay, then after you enter all of those, the formula will add up all the total common expenses. It will multiply it times the business use percentage, which comes from above from the square footage information, and will give you a tenth of the business deduction. The next thing that the client can deduct if they own the home is a percentage of the depreciation. And then how you figure that, you enter the original cost of the home, including closing cost. With closing costs, I just wanted to point out, be careful not to include prepaids. Prepaids are amounts that are going into the escrow account. Those are not necessarily expenses, they're just prepaids towards future homeowners insurance and other expenses and property taxes. So they're not part of actual tax deductible closing cost. And that's a mistake that I find that's common. So just wanted to point that out. You have to subtract the estimated value of the land. That's a tough one, I know. Sometimes if the client had a good report when they purchased the home, a good estimate, then you can do that. I've had clients use their property tax bill. I have CPAs who use a percentage. I don't know what the right answer is, but I always say the right answer is the correct answer. So do your best to find what the actual value of that land is. And then you add to that capital improvements. Capital improvements, as you all know, are not repairs. So these are things that add value to the home. For example, a new roof, a new driveway, new siding, new boiler, remodeling of the home, like a new kitchen, new bathroom. Typically that's how I describe it to my clients, what a capital improvement is. Something that added value to your home. That gives you the basis of the home, and then the software will multiply times the business use percentage, and you get that divided by 39 years, which is the useful life of a commercial property. And again, if that's being used in your business is for purposes of depreciation, that's not really a residential. They use the 39 years commercial useful life. Okay, and that's how you get to the depreciation expense. I just wanted to point that out because I do a lot of S Corp returns that, as you know, the depreciation is typically not allowed on an S Corp return because the S Corp doesn't own the home. So just wanted to point that out, that home office deduction might be a little different under the S Corp scenario. And then I wanted to point it out, the safe harbor method. That one is, I have it here in the comments below too in red. It's $5 per square foot, and that's capped at $1,500. The 100% business use test is still observed, so that area still has to be used regularly and exclusively for business. Okay, so I have that formula here as well, so you can see the difference between one calculation and the other. As you can see, this one here with the depreciation is better in this scenario than the safe harbor. Okay, then I did this cool thing on the bottom here to help you guys if you have a client who's a daycare. So under this scenario here, I put in the total square footage of the home, and let's just say they use most of the home for the daycare. Maybe just one room, maybe their teenager's room because it's too messy like my own. So maybe that room is not used for the daycare, but let's say 2,000 square feet from the home is used for the daycare. So that gives you a business use percentage. Since if this 2,000 was actually used exclusively and regularly for business, then this would be their business use percentage. But that's not common. Most daycares, they might have one area that's used exclusively for business, but the rest of the areas are not. Like the kitchen, they might use the kitchen to feed the kids and cook meal for the kids. Sometimes they might use their living room or their rooms to put babies to nap in. So just wanted to keep that in mind, that that's not the actual business use percentage for the daycare, because most daycares don't have an area exclusively for business. So, and then for the business use calculation for the daycare with the shared area, you have to do some math, which is first figuring out the number of days the daycare was open and how many hours per day is that daycare open. I gave you guys a sample and I put the formula there on top. So in this scenario, I've assumed that the daycare was open 10 hours a day, 5 days a week, and it was open for 50 weeks out of the year. So they only closed for 2 weeks. So under this scenario, the total hours that was open for business is 2,500 hours. Then, assuming again the daycare was open all year, you enter the amount, number of hours, 8,760. And this number is basically 365 days times 24 hours in a day. If the daycare started, let's say, halfway through the year, then you're going to have to count the number of days, multiply times 24 hours in a day, and then plug in the correct number here. Okay, so then the formulas will do the rest for you automatically. It will divide the number of hours open for business divided by the total number of hours in the year. It will give you that percentage, and then the actual percentage is the multiplication of both. The business use percentage here based on the area times the business percentage here based on the hours. That's the actual business use percentage that the daycare uses. And then I ran the numbers here under this scenario based on the home expenses above. So under this scenario, the daycare would have a total home office deduction of $5,344. Again, that's not a bad deal. Most of my daycare providers do get a very nice home office deduction. Okay, so let me just make sure I went over all the things I wanted to explain to you guys. Oh yeah, assets. If an asset is owned 100% for the business, then that could be deducted straight on the Schedule C. And that's a complicated one. I think of it as something, maybe if you buy something for the garage that's going to be used 100% for the business. Maybe this homeowner runs a auto repair shop from their garage. And maybe they buy like a heating unit just for the garage, just because the garage is solely used for the auto repair shop. So, you know, if that AC unit or heating unit is being used just for the business, you could deduct that on the Schedule C directly and skip the home office piece here. So just something to think about. And then the other thing I wanted to mention is I have some clients who are S-Corps, and they do pay rent to themselves, but that's done the proper way. For example, I have a client who has a commercial business, a commercial property. I think he's chiropractor. Let's just use in this example a chiropractor, and that building is owned by a different LLC, not the same as the S-Corp. So the S-Corp does pay rent to that LLC. And this is typically acceptable by the IRS because you can't pay rent to yourself, but in this situation, the LLC is a separate business entity who owns that commercial building. So that's typically an acceptable way to do it and get that depreciation deduction that I mentioned above. Okay, so I'm sure there's other ways that other people can share with you on how that can be done legally, but that's typically the way that I find it the most acceptable. All right, it was a pleasure again sharing another video with you guys. I hope you enjoyed it. Please subscribe to our channel. We're gonna be try to come up with different spreadsheets that we can share with you guys. Feel free to email us or make a comment on a spreadsheet that you thought would be helpful, and maybe we can, in our spare time, design another spreadsheet to share with you. Thank you guys. Have a great day.